Hello, traders. How are you all? So, guys, join everyone fast. So, hello, everyone. Welcome to this live webinar. Today, I'm your host again. My name is Amr Jihad Hussain, and thank you very much for joining me today. And our today's topic is about capital management. Most of the new and experienced traders also lose their capital just because they don't follow one simple rule in trading properly, which is capital management, money management, and risk management. In this today's webinar, I'm going to teach you simple and step-by-step easy way so that how you can manage your risk, how you can manage your money, how you can manage your account in a trading. So guys, don't wasting any single time. I want to just jump into today's topic, but before that, I want to share with you a little secret to you in the middle of this today's session. I'm going to reveal a 120% a promo code. With the help of this promo code, you will be able to gain a 120% extra money on your trading account. Suppose if you deposit 100 USD in your account, the initial balance will be added as 220 USD. So, guys, stay with me till the end and learn something new. Learn the most important topic in trading and also claim the 120% bonus code. So, guys, without wasting any single time, let's get started. Also, guys, confirm that my voice is also clear. You can hear me very clearly. Everything is looks good. So, let's start. Our first topic: a good entry is not enough. So, guys, I'm going to ask you a questions. Sometimes when you enter a trade, you get a very good trading setups. That simply means you are going to earn money. Not exactly. Suppose you enter your trade. Suppose you enter your trade here, and there is a high possibility. There is a possibility even your setup is a very good setup. You earned a uh, you analyze a lot before enter the trade, so you are very confident at this setup, but in this market, in this trading market, nothing is guaranteed. Nothing is 100% guaranteed, so anything can be happens. Maybe the market can go against you and give you a losing trade. So guys, a good entry is not single a single good entry is not enough to be profitable in this trading field. You need to have a very good money management plan. Before, you have to understand what is your risk. You have to accept your risk before you enter a trade. You have to be calculate all your risk, all your profit target, all your limit of your risk, and your entry positions also before you execute your trade. So guys, understand this one. A good entry is not enough to be in profit. You have to be very cautious in trading. You have to be all combined. You have to always look at your capital, also how much you have in your balance and how much you are willing to risk. Okay, so let's go in the next topic. Next topic is what happens after you enter. So what actually happens when you enter a trade? A lot of things work in your mind when you enter a trade. After you enter a trade, after you get a suppose you get a very good entry, suppose you get a very good entry here, very good entry, you put your stop loss, you take profit also. So after you enter a trade, a lot of traders got this very emotional. they become very emotional after they got there, after they enter, after they execute their trade. They become very confusion. They fall into very confusion, and they become fear. They think that, oh my god, am I execute the trade wrong? Am I just put my stop loss in the wrong area? And so am I should I close the trade? Should I got my trade profit here after two or three candle go in favor of you? You, the trader, thinks that, oh, should maybe the market can reverse? Should I close the trade manually? So a lot of psychological things happens to you after you enter the trade. A lot of things happens to you because you did not plan your trade before you enter and before you execute. So every trader should plan before execute their trade. You should analyze the market where you will enter your trade. That's okay, but you have to be careful about, you have to be planned about your risk, how much you are willing to risk at this specific amount of this specific entry. You have to calculate your risk, you have to calculate your take profit also before you enter a trade. So guys, don't be panic, don't be fear after you execute your trade. You don't have to do nothing after you execute your trade. You do all your money management, capital management analysis, trade management analysis before you execute your trade. After you execute your trade, just observe the market and focus on your validation, focus on your entry validations, market structural validations. That's what you can do only after you execute your trade. Okay, I'm going to also show you some examples, some tips and tricks, and some rules that you can also change. You can also close your trade manually, but two or three difference two or three scenarios in the market. So guys, you have to plan before you execute a trade. That's the thing. A planned trade is easier to manage than an emotional trade. Okay, don't be emotional. Don't be emotional after you enter a trade. All the things will only lead you to loss. So let's jump into the next topic. What is a stop loss? Now we are jumping to the important topics of this today's webinar. What is a stop loss? A stop loss is a loss limit. Suppose you enter a trade here after you saw a very good, this is a support zone, and you get a very good entry, getting rejections. After getting a rejection, you're getting a very good entry setup, as you already discussed about in our previous webinar. What is a very good candle confirmation is? This is a candle confirmation. After getting this candle confirmation, you enter, you trade here. After you enter, you trade here, you have to set a stop loss, because suppose your account has $100, you only has $100 in your account, and you execute your trade here with isolated cross margin. I'm going to show you also what is isolated cross margin, what is a isolated margin, what is a cross margin. I'm going to teach you how you can execute your trades, how you can manage your trades, how you can manage your setups in the IQ option platform. And IQ option platform also offer two kinds of margin trading. What is the isolated trading, isolated margin trading, and one is a cross margin trading. So I'm going to also teach you this one. Okay, after you enter your trade here, you have to put a stop loss. If you put a stop loss here, suppose you enter your trade here and you put your stop loss $10, you put a $10 stop loss. If the market go against you, if the market come and go against you and exactly hit your stop loss, you may only lose $10 at this specific entry. Your account has $100, but after the if you, because you set your stop loss here, the market may go against you, and the market go against you and exactly hit your stop loss, and your entry and your trade position is closed automatically, and you only lost $10 at this entry. So you got stopped out only for $10. Your loss limit was $10. You lost only $10 at this 100 USD capital. You have left $90 still in your account. So this is a stop loss. A stop loss helps you to limit your loss. If you don't just set your stop loss, the market may go again and down and down and down unlimitedly until the balance is fully wiped out. So guys, a stop loss is very much important in trading so that you can limit your loss before you execute your trade. So let's move to the next topic. Our next topic is, where should you place your stop loss? Very important. Where we should put our stop loss. Now we know that why stop loss is very much important. Now we have to understand where we should put our stop loss. There are a lot of ways you can set your stop loss, but most of the traders do those things. Let me give you some glimpse about it. Suppose you get an entry here, okay? Suppose the market go in the upper direction, you get your entry here. This is your entry, right? This is your entry. Maybe you get a entry at the continuation period. As you already know, this is a impulse pullback and continuation areas. This is an uptrend. We get an buy entry here. After getting an buy entry here, we have to set a stop loss. A lot of traders do, based on their strategy, they put their stop loss. Maybe they had a strategy of a RSI divergence, so they put their stop loss below any candles, below a very big candle, below a weak rejections. A lot of people also do with the pips value, 5 points below, 5 points above. Is sometimes a lot of because every trader has a different types of trading ideas, a different mentality, a different strategy. So not everyone set the stop loss at the same time, but the professional and smart traders set the stop loss based on market structure and support and resistance. I'm going to show you 3 ways you can set your stop loss in this trading field so that you will get an extra confirmation, extra advantage in your trading setups, so that there is a very low possibility that the market can stop out and liquidate your stop losses. So let me show you this one. The first is, if you always try to set your stop loss based on the market structure. Suppose this is a market structure, market go in the upper direction and we get a little pullback here. After getting a little pullback here, we get an entry here. Market is moving in the upper direction here. That's why we only look for buy setups. We get our buy setups. Now where should we put our stop loss? Below the reaction area, below the reaction area, below the move area. This is the move area, right? This is also a support zone. So always set your stop loss below the support zone. This is the support zone, and we set our stop loss below the support zone, just because in the future, if the market comes below, because this is your entry, if the market comes below, and if the market comes so much below and exactly close at the support zone, there is a high possibility, because this is a support, buyers are also active in this support zone, so there is a high possibility that the market can reverse again in the upward direction after hitting your support zone. So the market will go in the upward direction again. Market may go in the upward direction again after the market hit your support zone. So you set your stop loss below the support zone. You get an advantage that the market is go again in your favor of your entry before they touch your stop loss. So you will get a very good advantage when you set your stop loss below the support zone. And in the downtrend, in the selling setups, you set your stop loss below these reaction areas, below these directional change areas, and also above these directional change areas. Suppose this is a resistance area, you set your stop loss here, a little above your resistance area. That's how you can save your trading setup. Suppose you execute a trade, a sell setup, you execute a sell setup here. After you execute a sell setup here, there is a possibility that market can reverse, market can go against you, and after the hit at is this resistance area, there is a possibility that the sellers can enter and the market can again move in its original downward direction, your favorable direction. So that's how you can save your stop loss, that's how you can save your entry to touch a to getting a stop out. So that is the ultimate thing you can do. You can place your stop loss. Always watch your stop losses. That suppose this is a support zone. Let me now show you another thing here. Now this is a support zone, a random support zone. You get your entry here. Suppose you get your entry here, you get a buy entry here, market go against you and exactly close at your support area, and you set your stop loss below this support zone, because if you set your support zone here or here, there is a possibility market can stop you out. So this is a smartness to set your stop loss below the support zone, so that if the market exactly go and close and hit a very near your stop loss area, but if there is a support zone here to save you, because after hitting the support zone the market can go in the upward direction, because in a support zone buyers are interested, they are active to push the market in the upward direction. That's how you can save your stop loss and your entry. I hope you get it, guys. I hope you understand where you should set your stop loss. Okay, so let's go for the next topic. What is a take profit? A take profit is a planned profit limit, a planned profit target where we should set our take profit. In the trading field, the importance are the same. The stop loss is also important, the take profit also the same important. If you don't plan for your take profit, you may also you may also face a loss in this trading field. So guys, a take profit also very important in this trading field. Suppose you set your stop loss at $10. You set your stop loss here at 10 USD. You set your stop loss here at $10. Suppose you set your stop loss $10. You execute your trade here. So if you set your stop loss at $10, you have you all the things already planned. As I told you from the beginning at this live session, you have to plan before you execute your trade. You have to have all the things planned, your all the management plan before you execute your trade, so that you will not be fear and confused after you enter a trade. So plan all the things before you enter. Suppose you already planned for a 1:1 ratio. I'm going to also come into this, what how you can set your risk to reward ratio. I'm going to also talk about this one, but first I'm going to give you an example why take profit is so much important. Because if you don't set your take profit, the market may go up and up and up and up. Maybe there is a possibility you are not online, you just execute your trade and you go out somewhere, and market is going a lot because you don't have any take profit, the market is moved higher and higher and higher, and maybe there is a possibility market go at a certain of time, market can may go reverse and stop you out, because you did not set any take profit. There is a possibility that this winning trade also returned and turned into a losing trade. So guys, a take profit is so much important. Set your take profit so that the trade can automatically close after the market hit your target. I hope you get it. The take profit is also the same important as the stop loss. So now we are going to learn where we should place our take profit. This is a very good way. This is very important because we are here to earn money. We are here to earn money in this trading field, right? So we have to plan our take profit before we execute any trade. So we already planned our stop loss. We already learned how we can execute our stop loss. Now we have to also have a we must also have a take profit. We must also have a TP before we execute a trade. And now where we should set our take profit, as you already know, there is two ways you can set your take profit. One is a support and resistance, and the second is a market structural near a possible reversal areas. I'm going to also show you. Suppose the market move in the upper direction like here. Focus here. Suppose the market go in the upper direction like here, and a little reversal you get here. After getting a little reversal, a little pullback, you execute your trade here. You execute your trade here, and you set your stop loss here. One thing you should be careful about: on the left you see a possible reversal area. You see this one is also a possible reversal area. Even though this is an uptrend, but this is a possible reversal area. This is a resistance zone, so we have to be careful about resistance zone. We set our stop loss as risk versus reward ratio type, or the second is a possible reversal areas. Suppose here, focus on this visual here. The market is executed trade here. We set our stop loss below the support zone, but as we can see, there is a resistance zone here. We can set our take profit the next resistance zone, or below, a little below, near the resistance zone like here. We can set our take profit here. Something is better than nothing. Okay, so there is a possibility that the market can reverse after the hit at this resistance zone. So it is very good, it is a very good idea to set our take profit little below the resistance zone. Okay, so always set your take profit in near reversal areas, in upcoming left or in the upcoming reversal areas like here. Like you get your entry here. Okay, suppose you get your entry here, and there is in the left a very good resistance here. So you set your stop loss here, because a resistance also becomes support. You set your stop loss below here, and this is a take profit. You set your take profit below, a little below this resistance area, so that you will get a very good clear entry setup. I hope you get it, guys, how and where you should place your take profit. Let's move to the next topic. This is very important, and this is my favorite also: risk versus reward. How we can set our stop loss based on the ratio. Very good, this one. If you set your stop loss and take profit based on this risk versus reward ratio, there is a high possibility that you will never, very few times, if there is a high, your trading setup will be a very boost into a very high probability trading setup. So guys, just focus here what I'm talking about. Suppose this is a support zone, right? This is a support zone. Okay, and somehow you set your stop loss below this support zone. You get an entry here, and you trade as an isolated margin in IQ option, and you set a 10 USD stop loss. Just because you set a 10 USD stop loss, if you set your take profit as a 10 USD, suppose the measurement, fill the measurement, this is the measurement, this is the measurement here. Focus on the measurement. you can see the measurement between your entry and stop loss. Calculate these things. Just calculate the measurement between your take profit, the your stop loss and your entry. Suppose you have the distance between your entry and your stop loss has a 10 USD, a 10 USD. A distance is 10 USD, or you can say 15 pips. I'm not going to give you a confusion knowledge, because pips and lot size has a different genre, different types of knowledge. Just for today, understand the distance between has entry, the distance between your entry and stop loss has a $10 loss limit. So you set your end, you set your stop loss, and your stop loss has $10 loss limit. And if you set your take profit as also 10 USD 10 USD take profit, this will gives you 1:1 risk to reward ratio. Your risk is 10, your reward is also 10. And there is another scenario is, if you set your stop loss $10 and you want to make more money, you want to make more money, less risk and more profit, you can set your stop loss as 20 USD. You can set your stop loss as 20 USD. That becomes the distance between your entry to SL areas to entry to take profit is twice. I hope you get it, because you set your stop loss is $10 and you set your take profit as $20. You set your stop loss as 10, you set your take profit as $20. That make is 1:2 risk to reward ratio. $10 is your risk, $20 is your profit. That makes 1:2 risk to reward ratio. I hope you get it, guys. That's how you can increase the profit amount, decrease the risk amount. Everything is all on you. But remember, always set your stop losses below the support zones, above the resistance zone, also based on the market structural reversal areas, possible directional change areas. Also set your take profit, also set your take profit zones. As I told you, watch the resistance reversal zones, watch the possible reversal zones before you set your take profit. You can set unlimited amount of take profit in this trading. IQ option doesn't has any limit on taking your profit. Okay, you can set only 5 USD SL stop loss, and you can set 100 USD take profit. It's all on you. IQ option also offer 800% leverage, 1000% leverage, a 1000x leverages. So a lot of opportunities you will find in IQ option, but you have to be careful about your entries, about the possible directional change areas, possible near resistance areas, so that market does not invalidate your entry, invalidate your setup. Okay, I hope you get it, guys. So let's move to the next topic. How much we should risk on one trade? So this is very important. I'm going to teach you today one and final rule in trading, that you can all till now we learned about how much we can lose, how much we can set our stop loss, where we can set our stop loss, we can set a limit on $10, $5, anything we can set a stop loss. But now we were going to learn, as based on our amount, as based on our account balance, how much we should put on one single trade. So let's understand this one. So first of all, let's understand what we are seeing on this screen here. Suppose we have 100 USD. Suppose we have a $1,000 in our account. So as I told you, I'm going to teach you one and only rule that you will follow till in the future, because slow and steady always wins the race, guys. Don't be greedy here. Just win, just be grow step by step. If you grow step by step in this trading field, you will always stay in the market, you will always be the player of the market, you will never blow up your account again. Just follow what I'm going to teaching you. If you have $1000 in your account right now, you only put 1% of your capital. What is a 1% of $1000, guys? Just calculate it, which is $10. A $1000, 1% is $10. So if you risk in a one single trade, suppose you are plan to risk $20 a day. Suppose you are plan to risk $20 a day. So you can divide into two trades. You can divide it into two trades. One trade has $10 risk, another has $10 risk. Okay, you can divide it into two trades. That is the direction I'm going to give you. So if you set your stop loss, if you set your daily risk limit as a 1%, you will be in the market for long run. You will be in the same market for the longer period of time. Suppose you put a stop loss of 1%, which is comes to a $10. 1% only an example, choose a percentage that fits your plan, and that is the what I'm talking about. If 1% is comfort, if you are comfortable to lose 1% in your capital, if you are comfortable to lose 1% of your capital in every single trades, in every setups, then you are good to go, you can do it. But if you are comfortable to lose 2%, and you based on your account balance, you can also do it. But my recommendation is always use 1%, so that you can be able to stay in the market for longer period of time. So guys, let's focus here, let's learn what is happening here. This is a support zone. If we set, because we have $1000 in our account, if we set our stop loss here, $10 stop loss, we can set as $10 stop loss. These things, this 10 USD stop loss, this stop loss, we can set our stop loss as much as you can based on our account balance. But as I told you from the beginning of this session, that IQ option offers two ways you can set, you can trade on the margin. IQ option offers margin trading in two ways. There is a simple mode, there is an advanced mode. So after that, I'm going to teach you this one. So if you enter here, and if you set your stop loss 1%, and if the market go against you and hit your stop loss, you may only lose 1% of your total capital, that will be only $10. Okay, so you can set your take profit 1:2, as I told you, based on your trading setup. You can set your stop loss as $20, no issue. You can set your stop loss $30 too, based on your strategy. But understand this one, remember this one, always put your risk amount is 1%. This is my recommendation to you guys, always set your stop loss as 1%. So before I jump into another risk, another slides, now I'm going to reveal the 120% promo code, guys. Are you guys ready to see the promo code? 1, 2 and 3. I hope you can see the promo code, guys. Now use the promo code, and just you to use the just deposit into IQ option and get an extra 120% promo code, 120% bonus in your capital, so that you will get an extra margin in your trading, extra advantages to stay in the market for a long time. Okay guys, let's move to the next topic. Our next topic is what happens when you risk too much. Let's understand one thing here. Focus on the left. On the left, we have $1000 in our account, and we put only 1% lost, 1% risk amount for each trade. So we execute 5 trades and lost total of $50. Lost total of $50. We still have $950 in our account. That's how you are able to stay in the market for longer time. So, and on the right side, if you see, this trader set their stop loss, set their loss limit as 10% each execution. Each trades they use 10% of their total capital, which is 100%, which is 100 USD based on the $1,000 account. So if the loss 5 trades, their account will below, their account will become a $500. They will lost $500 in 5 trades. Half of their account balance will be blowing out if the loss consecutively five losing trades. So guys, as I told you, this guy will never stay in the market for a long time, but this guy can stay in the market for a long time because they are using 1% of their capital. Each trade they are using only 1%. So guys, if you think that you can be a millionaire in one day in trading, that's not simply possible. If you want to make your trading career longer time, if you make this as your trading as a career, if you want to make trading as your career, you must follow this rule, the trader A rule, which is risk only 1% of your total capital on each trades. I hope you understand this one, guys. This is very important. Protect your capital is so much important. If you don't have money in your account, how you can trade, how you can earn money? So this is very important. Always protect your capital. Use only 1% if of your total capital on each trades or each executions. Now let's jump into IQ option, and now let's understand how actually IQ options margin trading actually works. Now let's understand. This is okay. Go here, click on the profile section, click on the settings section, click on the trading section. You will get trading mode. IQ option offers two trading mode. One is a simple mode, one is an advanced mode. So what is a simple mode? Let's understand first what is a simple mode. Simple mode means trade on isolated margin. Allocate a specific amount of funds to this trade option to limit your risk to the amount you have set for this position. That simply means you can set your positions. Suppose I can set my investment amount. Suppose I set my investment amount $10, and I can set IQ option offers 800x leverage. This is very good. Leverage helps you to get very fast money. Suppose you trade here with a leverage of 100x, and maybe your take profit, maybe your SL is here. You will get, if you set trade for if you execute a trade for 10 USD, market is going the upward direction and hit this one, you may get 100 USD. Suppose you will get 100 USD, but if you said your leverage limit is 800, if the market reach here, before we getting 100 USD, now we are getting $800 at the same area. So the leverage helps you to maximize your profit, okay, based on the areas. Now let's understand this one. What is a simple mode? Simple mode helps you if you invest here. Suppose I put a buy trade here. As you can see, I set my stop loss. This is the take profit, this is the stop loss. I can set my stop loss, just drag into anything, anywhere you can drag it in the upper direction. You can set your take profit. This is 1:2, this is the 1:2 take profit. I can take $40 in the risk of $20, and you can also set your take profit and SL here at the simple mode. Now let's understand what is the difference between isolated margin and the cross margin. We are using here simple mode. IQ option refer this simple mode as isolated margin. Isolated margin means you can also execute another pair and set also 10 USD. If I said also, if I trade also buy here, so just understand this one here. We set a buy trade here on the both your USD chart and the gold chart. So in the bot chart, we execute for investment $10. This one is a $10. This one has also $10. We use an isolated margin. If the market go against us, just very focus here, guys. What I'm teaching you, we set our stop loss as $20, but we set our stop loss as $20, right? We set our stop loss $20, but we invest here at the isolated margin only 10 USD. That simply means if the market go against us, if the market go against us from here in the middle, we lost $10. After the loss limit hit $10, this trade will automatically close. This trade will automatically close without even touch our stop loss area, and also even we have amount in our account, right? The trade will automatically close. That's how an isolated margin works. Isolated margin means you can only invest, if you invest $10, you will only lose $10 in this execution. Okay, by the help to the by the help this, I'm sorry guys, this simple and isolated margin helps you to execute several entries, several markets you can enter several times, so that your initial capital don't have to worry about. You don't have to worry about your initial capital. But if we use an, first of all, close them. If we use an cross margin, if we use an advanced mode, IQ option referred this one as an advanced mode, which is a cross margin. Cross margin simply, if you put a quantity of one lot, if I said a one lot here as an SLTPs, so this trade will let me give you a clear example here. We set a lot limit of one lot, right? We execute a trade on one lot, and we are using an cross margin trading setups, a cross margin trading mode. So because we are using a cross margin trading mode, now this trade will take support to the whole amount of our account. Suppose if the market go down and down and down, suppose we didn't set a stop loss, suppose we did not set any stop loss, if the market go down and down and down until the whole amount will be wiped out, the market can go down and down, the market may go minus and minus and minus. I hope you get it, guys. So a cross margin mode helps you to execute a trade. They get support from the whole initial balance. That's the difference between a cross margin mode and the simple mode. I personally love to trade with the simple mode. This is a very good execution, very good model of IQ option. Thanks to IQ option to uh, show us and give us these kinds of trading features. So guys, use always this simple mode so that you can be able to gain in the stay in the market for long run. Okay, so let's jump into our topic again, managing an open trade. So how we can actually manage an open trade? Suppose we enter here, get a buy entry, set our stop loss here, and set our take profit here. All the things already planned before we enter a trade, right? After you enter a trade, as I told you, don't be panic, right? Don't be panic. Don't just fall into any fear that just don't overthink after you enter a trade. All the think, all the analysis, all the overthink you do before you enter a trade. Okay, do not move your stop loss, do not move your take profit after you enter a trade. But now I'm going to also teach you two scenarios you can close your trades. There are two scenarios you can close your trades. Follow your plan, guys. Just as I told you, the plan you already set before you execute the trade, just follow them. Do not, this is the initial advice, this is the initial advice, this is the final advice, is plan all the thing before you execute. Plan your stop loss, plan your entry, plan your take profit before you execute your trade. But after you execute your trade, do not overthink, do not do anything, just let it happen. But there are two ways you can manually close your trade. Manually, you can interfere in your trading setups. The one way is news. If somehow there is a news will come, if somehow there is a news will come in 5 to 10 minutes, and you have a running trades on the market, you can close your trade. You can close your trade, but you have to see some markets correlations, where if you trade on gold, you have to set some gold correlation pairs, where if it's an US uh, news, then you have to be think about it twice. A lot of things can be happen. I'm going to teach you this one when we are talking about news trading. So, and the second is structural change, invalidation of your setups. Suppose you have a very good strategy says based on your strategy you trade here, but suddenly the market reversed. Suddenly the market reversed, and you saw that there is a high possibility market can go inverse, go reverse, your trading setups. What you can do, you can sell half of your trading amount. If the market is above, if you are in profit, suppose you are in profit here, then it take profit is way more far in the upward direction, and you think that okay, now I'm in a little profit here. What you can do, you can set your stop loss. You can set your stop loss and drag it to here, make it a break even. You set your stop loss and drag it to above your entry, make it break even, and you can sell half of your total share, half of your total amount. Sell your half of your total amount, you are in break even also, so you are in a win-win situation. And the other thing is, if you saw a market structural change, if you saw a market structural change happen after you enter a trade, you can think of these things. You can set your break even, you can set the stop loss in the break even, and you can close half of your total share. That's how you can manage an open trade. That's the thing you can do. But without these things, without those scenarios, you can't touch. This is not permissible to touch your entry after you execute a trade. Do not do this, guys. Just plan, enter, manage, and follow all the rules. That's the advice I'm giving you. So let's move to the next topic. Should you move your stop loss? As I told you, do not move your stop loss. There is a one condition you can move your stop loss. As I told you, when you are in profit, you can move your stop loss below or above your entry. If you're doing a sell entry, right? If you execute a sell entry here, if you execute a sell entry, you put a sell entry here. This is your stop loss. You are in profit here. Suppose the market is here now, you are in profit, and you can set your SL. You can drag this SL to here. This is called break even. You can break even, you can change your SL and drag it to your profitable area. Only that's how you can move your stop loss. That's it. There is nothing you can do with the stop loss. Do not move your stop loss against you. Okay, that's very dangerous. So the purpose of stop loss is to control risk, not a guaranteed that every trade is not a guarantee. Okay, loss is a common thing in trading. You have to accept the loss. Okay, suppose you have $100 in your account, and you lost two trades, and in total you lost about, as I said, 5 USD. 5 USD will loss in total. If 5 USD is your daily loss limit, just stop it. Don't overthink, don't overtrade, just stop it here. That's the thing you can do. Do not try to overthink, do not try to overtrade. That will only lead to you in your loss. That will only lead to you to wiping out your capital. Okay, guys, so let's go for the next topic. Our next topic is when should you close a trade. As I already told you guys, you only close your trade when you are in profit, and you see that and if suppose you are in profit, you are in here, your stop loss is here, the take profit is here, and you see in 5 to 10 minutes there will be very big news will come, so you can execute your trade. You can close your trade here because you are in profit. But you are in loss, you can, or you are in a very short profit, you can set your stop loss, make it break even, just close it. You can do two things here. Just close your trade if you are in profit already, but and if there is a news come in the future. And the second is, if you are in profit and you think that the market can change, the directional change already happened, you can close your trade, you can set your move, you can move your SL to break even. That's you can do with your stop loss. And you cannot just close your trade directly, okay? If those things did not happen, if those scenarios did not come in this trading, in your after you execute your trade, just stop it. Don't overthink, just wait, let the market give you the result, okay? Wait for the market execution, wait for the market move. Don't do overthink. So now guys, let's talk about some common mistakes that we have to avoid in trading. Okay, the first thing is risking too much. As I told you guys, only risk 1%. Here is shown 15%. Do not risk too much in trading. This will lead to blow up your account. Okay? Just risk, as I told you, only 1% in every trade. This will help you to stay in the market for the longer period of time. And the second is guys, random stop loss. I told you how you should put your stop loss. Do not put your stop loss in random areas, random reversal areas. Just put your stop loss below the support zones, above the resistance areas, and also based on the directional change areas based on the market structure. And the third is moving your stop loss. Do not move your stop loss, guys. As I told you, only one scenario you can move your stop loss, which is if you are in profit, and if in the future in 5 to 10 minutes there may be a big news will come, you can move your stop loss to the break even. You can do only one thing to move your stop loss. And the third is unrealistic target. Do not make unrealistic target like 1 is to 10, 1 is to 15. Do not do this. 1 is to 1 is the default. 1 is the true is also permissible, but very few setups you can use 1 is to 3, okay? That's the goal. That's the thing you can do in trading. After that, it will be very risky for you, okay? And guys, the fifth is emotional decision. Do not take trading after, do not overthink after you enter, guys. Do not trade with the help of FOMO. Do not trade with FOMO, fear of missing out. I'm going to talk about these things in our next webinar. What is a trading psychology? How you can manage your psychology in trading, so that you can be able to very confident before you enter a trade. After you enter the trade, you feel calm, you feel confident. So guys, stay tuned. So don't be fear after you enter the trade. If you follow all the things, if you follow your risk, if you follow the risk reward, you will never be fear in trading. Do not panic, you will never be panic if you follow all the rules I just told you today. If you follow all the rules step by step, you will never be able to get fear, you will never be able to be panic in this trading, okay? So just be patient trading. Don't trade emotionally, trade with knowledge, trade with confidence, trade with smartness. I hope you get it, guys. Always plan before you enter the trade. Plan and then set your risk and entry and just exit. That's it, guys. Do not overthink, do not overtrade, just follow your plan. So let's go for the next topic. Our next topic is plan the trade. how you can actually plan your trade. First of all, after you say you suppose you get a very good entry here, you already plan for enter here. If you plan for enter here, you have to set your stop loss below this support zone, and you have to set your take profit little near this resistance zone or exactly at the resistance zone. You can do it. That's how you can plan. You have to plan your risk amount, you have to plan your take profit amount too. So that's how you can plan. After you plan all the things, after you saw some news, all the things you analyze, and then you can execute your trade. Do after executing your trade, do not set your TP and SLs. All the things set before you, all the things planned before you execute your trade. That's I told you, this is the challenge you should do. You should not just execute your trade and then think that why should you set your SL and TP. Do the things before you enter your trade. Let's go for the next topic. Our next topic is analyze. Okay, now this is a trading setups, guys. Let's analyze this one for you. This is a support area, right? We said we planned our stop loss to set here. We planned our take profit as 1:1 risk versus reward ratio, and we plan to enter here. We planned what we do here. The market exactly come to this resistance zone. We get a very good rejection. After getting the rejection, we get 3 candle confirmation, which is a candle confirmation, as we already know about how we can get a very high probability trading setups. So we get it. So after you entered here, we set our stop loss as 1:1 risk reward ratio. We can do it 1:2 and 1:3 too, but not more than this. Okay, this is a very good safe setup you can do in this trading. Find the zones, wait for confirmation, plan the stop, plan the target, and check the risk. After set your risk, set your take profit, and that's how you can execute a trade. And one thing I want to add for the binary option trader, till now I'm talked about a margin trader, a forex trader, a longer time trading period of times traders. But now I'm going to give you a little advice for binary option traders. If you are a binary option trader, if you are a fixed time trader, let me give you two advice here. If you have $100 in your account, only put 1%, I'm sorry, only put 1 to 10% in each trade, and also set in your mind two things. First is just close your app, close your trading application, close the IQ option app if you hit your target or if you hit your loss limit. If you has a $1,000 in your account, if you execute your trade 1% each, $10 each, and if you, and one important rule is, if you lost consecutively two trades, if you lost two consecutive trade at a time, just close the trade for the day. That's the hard rule for you fixed time traders. And if you hit the target, if you have a $50 or $30 target, just if you hit the target, just withdraw your profit and close the application. That's the two rule for the fixed time, the binary traders, guys. I hope you understand. Let's move to the next topic. Our next topic is a checklist. Let's read the checklist, guys. Before we execute our trade, what will be our checklist? First checklist is valid setup. If the setup is valid, if you think that the setup is valid, make it a tick mark. And the second is entry. Where exactly will you enter? As you already know about, after getting all fourth step confirmation, we can execute and enter our trade. If you don't know the what is a fourth step confirmation, you can watch our previous webinar about the trading setups. Now second is enter is gone. This is the stop loss. We planned about entry, we planned about trading setups. Now we have to plan about a stop loss. Suppose we planned a stop loss, we lost limit of $10. Okay, we can handle a $10 risk, we can handle a $10 loss on in this trade. Okay, this is also gone. And the second is take profit. we are going to take 1:1. We are going to take 1:1. That's mean if the loss is $10, we will take a profit of $10 too. So that will be 1:1. So we also done the take profit. Now how much are willing to risk? As I told you, the risk is if the balance is 1000 USD, we are going to take a 1%, and 1% of 1000 is a $10. We already mark about it. So all the things is marked, all the things, all the checklist is already planned, and then you can enter your trade. After you feel all the things is mitigated, then you can enter and execute your trade. So guys, let's move for the next topic. Our next topic is 5 golden rules for protecting your capital. The first is stay in the game. Protect your capital. How you can protect your capital, guys? By only using 1% of your total capital in each trades. If you have $1000, use only $10. If you have $100, use only $1. Based on your trading setup, you can also move it to 2 to 3% of your capital. You can risk your 2 to 3% of your capital based on your strategy, based on your comfort zone. And the second is know the risk. You have to know the risk. Okay, you have to know the risk before you enter a trade. You have to calculate all the risk. You have to set your loss limit. You have to set your risk limit before you enter a trade, before you execute a trade. That's how you can become, you can be comfortable, you can be patience after you trade. Don't be panic. You can be able to panic, you can be panic after you enter a trade if you already set all the things before, if you planned all the things, if you analyze all the things before you enter a trade. And the third is plan your stop loss. As I told you guys, set your stop loss before you enter. If you set your stop loss $10, that's it. Do not just move your stop loss after you enter a trade. Set it and let the market decide. And the fourth is plan your take profit, as same as important that the stop loss. If you set a stop loss, you have to set your take profit too. As I told you, you can set your stop loss and take profit based on the market structure and support and resistance on near directional change areas. Also, you can use it as risk and reward ratio. You can do these things. And the fifth is control your emotion. After all the things is mitigated, after all the things is matched, you can and then the things is control your emotion. This will automatically comes if you follow all the rules. The emotion, your emotions will be automatically controlled. So guys, let's move to the next topic. Our next topic is the 5 things to remember. The that's we already discussed about the plan. We have must be, we have a plan before you enter it. The in this plan all the things is come into this plan. Okay, plan, protect, target, control, and discipline. Plan your trade, protect your capital, set your target, control your risk, control your emotion, and follow this. Repeat. I hope you get it, guys. And that's it. This is the end of this today's webinar. In this today's webinar, we learned about how we can manage our trade, how much we should put in a one single trade, how much we should be calculated according to our tradings, according to our initial capital. So everything we learned today. Protecting your capital is so much crucial in trading than executing a trade, than finding a strategy. A lot of people just they are changing strategies to strategies, one strategy, second strategy, fourth strategy. Just there's if they lost 2 trades, they are just jump into YouTube and search for new strategies. Don't do this, guys. Just master in one single strategy, master in one setup. Follow this protecting your capital, follow this capital management rules. You just said it, you will be in the market for long run. This is very important, guys. If you follow these rules, if you just follow those rules, that how you can control your emotions, how you can control your trading setups, how you can control your account balance, you can be able to stay in the market for a longer time, and you'll be a very profitable trader. So that's it, guys. That's it for today. Thank you very much, and don't forget to like, share, and subscribe this IQ Option Education channel for this kinds of informative videos, informative live webinars, and give a very good comment, guys, so that I can bring you these kinds of high quality webinars to you guys. And thank you very much, guys. Until now, tata, bye bye, and just set your